an organizer, and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the host of today's presentation on how to predict market direction using volume. In just a few minutes, Nigel's going to be coming on and showing you exactly how he uses volume in the markets to give him the edge. But just a brief introduction, I came to Hawkeye about 5 to 6 years ago. I was a normal guy just like you. I was out in a webinar. I heard Nigel talking. I came to one of his seminars, and I saw the advantage of what volume trading did to my trading, and that brought me on board. And one thing led to another, and here I am on board with Nigel, promoting these wonderful product. But the volume is the key to what we do at Hawkeye, and by making this available to you, we're giving you basically the keys to the kingdom, because if you understand volume, if you understand price, you're going to understand trading, and that's the whole idea about this. So without further ado, Nigel, I want to pass this over to you.
Thank you very much. Can you hear me, Randy, and see my screen?
Yes,
and you can. And you can see my screen with my photograph on, yeah?
Yes, you're good.
Okay, well, good evening, everybody. I'm speaking to you from England, and that's why I'm saying good evening. And thank you very much for coming in to listen to this short presentation this evening. I really want to reiterate what Randy said. It really is the key to the kingdom. It's the DNA of the market. Understanding volume is probably the least understood of all the indicators out there, and in my mind it's the most important one. And if you don't really understand volume, in my opinion, you don't understand trading, and you've got to get to grips with this. So let me take you through the presentation, and although it's a PowerPoint, I'll rattle through it pretty quickly, because the most important part of this is the question and answers, which is near the end, and I've got a very, very special offer for you for this evening on the volume 2, which will come during the question and answers. I'll show you what that is. But first of all, we have to go through the normal disclaimer. We are only giving education. We are not giving trading advice. We're not licensed to, and nor do we wish to. So if you have a problem with that, please leave the room now. Otherwise, I will continue. So the agenda for tonight is an introduction to volume, application of volume, my closing thoughts, and as I said, the most important part, which is the Q&A session. And if you are trading stocks or whatever markets you want, send them in to Randy whilst I'm talking to you, and he will tell me to go and look at any markets that you so wish, and I will pull them up. Randy, before we go any further, could you just put a poll out to everybody so that I can get a feel for what markets they're trading, please? If you could put that poll out and give me a percentage return as that goes out.
Okay, there are no polls set up, Nigel. I'm sorry.
Okay, it just helps me to understand, but if there are no polls set up, I will just go through E-mini, stocks, daily, intraday, and Forex, and some commodities I'll show you, because I trade a lot of commodities and I know those inside out. But I will just take you through those markets, and then I hand over to Randy, who will handle Q&As for as long as necessary. If you want him to be there for an hour, hour and a half, he will do so, but I'm going to be about 45 minutes in this presentation showing you volume. So traditional trading, we've got to realize that 70 to 80% of traders are failing, and that is a huge statistic, but yet trading seduces so many people in to become traders, and they fail. They fail for a variety of reasons. I think learning to be a trader is one of the hardest things in the world to do, because you start off with failure, as we all do, and whilst you're starting off and you're getting that failure, you're wiring up your brain to fear, and not many people can overcome their fear when they're trading. And then they are unable to pull the trigger, or probably the worst thing I see, and I've had many hundreds of traders through my seminars, they just can't hold into trends, and they come out far too early in a trend because they don't understand market structure, volume structure, and what the market is. We teach you that. And just digressing, we have 2 seminars coming up in October. There's one that's led by Randy in California, in Santa Ana in early October, and I'm doing a specific Forex one at the latter part of October in London with a guest speaker, Colin Ross, who runs the Hawkeye FX room. But going back to the presentation, 70 to 80% of traders are failing. The reason that they're using traditional trading strategies, max, stochastics, Bollinger Bands, Elliott Waves, etc. And these strategies really don't work because they're lagged. And that is why volume is so important. You know, I see so many people with their stochastics after many years of being a trader still trying to figure out what input they should put slow K on, or looking at the MACDs and trying to change the defaults 1226, 9 into other variant numbers, and all of them fail because you're just curve fitting for the market conditions that are occurring at the time. Whereas volume, there's no curve fitting. Volume is real. It is, if you think of it, the only leading indicator out there. It signals price movement before it happens. It shows market intent, and all other leading indicators are lagging. All other indicators are lagging. I've repeated that twice because they are. There's nothing out there that's really new. Okay, there's and it comes later on in the presentation that there was Elliott and Gann all in the 30s, provided a lot of this, Wells Wilder, etc. Probably Tom DeMark is the only person in my generation that's come up with new stuff, with his sequential movements, etc. But all indicators are lagging, but volume, when you use it on triple time frame, is the key. And what I'll be showing you tonight are charts where I've got triple time frames running, so a 10, 20 minute, 40 minute, or a daily, weekly, monthly. And those, by pulling in triple time frames, it really is the secret. And once you get to grips with this and understand it, I can assure you, you'll be having great success. But before I do that, let me just tell you a little bit about my story on how I became a trader, because I think it's pretty generic to most people. The only difference is that I got into trading by total default. I had a publishing business. I had 16 magazines. I sold them out in the 1980s, and from that I had quite a substantial amount of money, and I was invited to go and be part of the America's Cup team, the big sailing race when it was held down in Australia. Sailing is a big passion of mine, and whilst I did that, I invested a 6-figure sum with a stockbroker, went off, did the America's Cup, and when I got back, over lunch he told me he'd lost it all. I was over £300,000, which was a lot of money, and I thought, goodness, he's ripped me off. So I started to get all the trading notes, and in those days you didn't have computers. Once a week you got trading charts, and I looked at those and I thought, well, this is easy. Anybody can do this. And from having a staff of nearly 300 people, I thought, this is wonderful. I don't need to employ anybody. I can do this by myself. What's the difference of trading one contract or 300 contracts? So I started a trade, and I got to tell you, I was absolutely dreadful. I couldn't believe how stupid it made me look. I mean, we're all pretty well educated people, or else we wouldn't be sitting in this room tonight. And I just couldn't believe that I got it wrong so much. I was awful. And I realized that one of the big problems is you have to be a loser first. And as I said, that wires you up to fear. It's very interesting. I read an article a few years ago, not so many, not so long, maybe 2 years ago, about apprentices, electrical apprentices, and they have a very high dropout rate. And the reason being that they get a belt from the electricity whilst they're learning how to wire houses up, etc. And they become fearful, and they can't really carry on being an electrician. They can't get over the fear of that jolt that they got from the electricity, and I thought, wow, that is exactly the same as a trader. And one of the things as a trader you have to do is to be able to overcome your fear. And so many traders can't. They're just so fearful of losses that they can't overcome that fear. And it's rather like being a mountaineer or a surfer, on those big waves in Hawaii. To be successful, you've got to overcome your fear. And that's exactly what you've got to do as a trader. And as I said, one of the greatest mistakes I see, or obstacles rather, when I'm educating people, is that they cannot hold a trend. They come out far too early, and I bet that's resonating with some of the many people in the room this evening. You just get out of these trades too quickly because you don't understand the volume and you don't understand market structure. So what did I do? I was so bad at trading. In those days, I was writing it all out on chart paper. I had like a wallpaper table in my office, and I would get the Financial Times every morning in London, look at gold, and I was trading gold at the high, low, and the close, and where it opened, and I started to chart that on graph paper. And I was so bad that I even reached a stage where I thought, my goodness, if my logic's telling me to buy it, I'll sell it. And I did that. And I think I had about 6 consecutive winning trades. And I couldn't believe it. But of course, you can't carry on like that. So I thought, what I got to do, I really got to go off and study this and find out what the professionals are doing. So I traveled to the London Stock Exchange. I went there every day for 2 weeks. I treated it as a job, and it was before Bin Laden was around, so you could just walk in and lean over the balcony and watch the boys trade in the pits. I went there every day for 2 weeks. I got to know the floor traders. In those days, the exchange closed for lunch, so I'd go out to the pub and have a beer and a sandwich with them and go out in the evening, and I really got to know these guys. And I was trying to find out what edge that they had that I didn't have. And I really found the missing link. And they had an advantage. Well, they had three things. They had accountability. In other words, accountability means that they had a job. They were trading as a business. And very few traders out there trade as a business. They cherry pick. You look at the charts, you don't really sit down first thing in the morning if you're an intraday trader and say, right, I'm going to absolutely follow my business plan. We teach business plans in our seminars, and we are going to follow them totally. And there is no accountability. You all probably have a partner, and the partner will say, well, how did it go today, dear? And for many times you lie through your teeth and say it was great, or it was so-so, etc., etc. When you've got a full-time job as a trader and on the stock exchange, you have accountability. The boss can see what you did every day. There's no hiding, and you just got to get on with it. They had free money. Well, we can't duplicate that. That's called the spread, the bid and the offer, and many of them could just trade the bid and the offer and arbitrage between different stocks, but that was more complicated. But the most important thing that they had, they could feel the market. They could feel the buying orders coming in, the selling orders going out, and they could just feel the feeding frenzy. When it was getting hot, they could feel it. When it was getting quiet, they could feel it. They just had that feel of the market. And that is volume. And from that point on, I knew volume is the key. So what did I do? I started my journey. And the grandfather of volume spread analysis was Richard Wyckoff. He was around in the 1930s, and he, along with the other great traders, as I mentioned earlier, Elliott and Gann, were the big boys then, and he studied volume and price. And I devoured his books, and I even jumped on a plane. I went over to Phoenix in Arizona, where the Wyckoff family were located. They had a small little printing company in a shopping mall, and I managed to get a copy of Wyckoff's original course notes and put them in a U-Haul trailer, sent them off to a packer, and they came back to England, and I devoured them. and I went through his work, and I have spent literally, when I show you this volume algorithm, thousands of hours on it. It seriously took me a long time to disseminate what he was doing. And there was something that hit me between the eyes, and it didn't initially hit me. It was probably about a year into really studying Wyckoff's work that I realized something was happening, and it was the opening price principle. You know, standard volume, VSA, and there are other programs out there that do a volume of Wyckoff. They don't consider the open. Well, I think it's paramount, and I tell you the reason why. It's very similar to an auction. In Wyckoff's day, the open wasn't that important because there wasn't instant data. In those days, there was New York, Chicago, San Francisco, then it went across to Japan, down to Sydney, Singapore, back to London, etc. The open was all over the place. But today, we all see the same thing at the same time, and that's why you get false breakouts on those lagging indicators. As I said, everybody sees a break of a moving average, a MACD, a stochastic, whatever. So the opening is very, very important because it's similar to an auction, and I'll tell you why. In an auction, if an auctioneer starts something at $100 and he then goes down to 90, 80, 70, 60, 50, 40, 30, 20, and nobody's come in and bid, somebody comes in and bids at 20, they'll probably go 20, 25, 30, 35, 40, 45, close itself out. However, if he opens it at 100 and it goes down to 80 and a bid straight away comes in, it's more likely to go up and close at 140. And I went, aha, that's really important. So I started to look at the relationship of open into volume, as well as the high and the low and the close. And that really was a serious moment that got me to understand totally what was happening, because the open sets the bias for the session as an auctioneer sets the bias for that lot when he starts out with his opening price. So volume price analysis, and what I have done is the accumulation of 20 years of research. And as I said, it took me thousands, and I mean thousands. And if I wasn't single at that point in my life and I hadn't sold my magazine business for quite a lot of money, I would have probably been one of the statistics of people who have just got flicked out of trading. But it didn't hurt me to lose this money, although it hurt my pride. It didn't hurt my wallet. And I didn't have a family at that time, so I could just sit and do whatever I liked and devote as much time as I wished to this project. The algorithm is very complicated. People ask me what it is. I'll save it until I actually show it to you, what goes into it, so you can understand the algorithm that goes in. I think it's an elegant and sophisticated way of trading. It really, really does show you what is happening, and it shows you clarity. You know, one of the things that really bugs me as I go around and see so many traders around the world is they should be graphic artists, not traders. They've got so much on their charts, so many indicators. It just complicates everything, and they can't see the wood from the trees. And volume is just very, very simple. It just shows that clarity of thought. So, as I said, how you perceive charts, it shows you where there is structure. One of the indicators that we include, and I will show it to you very soon, is the Hawkeye pivots that show you isolated highs, isolated lows, and the reactions that we get off them. You normally get 3, 5, 7 bar reactions off these pivot high, pivot lows. It shows you where to place your trades, because remember what we are doing, we're not ever trading a market. We are trading risk. So you need to know what is the risk that I'm taking when I open this trade. And volume will tell you that, because if you're doing it over triple time frames, which I said is the aha moment, and you have all 3 time frames in your favor, your risk has gone down to virtually 20%. There's always a risk in a trade. One never knows on entry, but certainly you can take it right down to about 20% when you place a trade using volume, whereas before you're probably about 50-50. It also shows you where the profits you make, because you can exactly know when markets and trends are coming to exhaustions, because you will feel the market come out and the volume come in, and you'll see no demand volume right at the top, etc. And it'll also tell you how to protect your positions, because when you're in a trend run and you see, let's say you're going up and you see green volume or no demand volume coming in, I suggest you tighten your stops. So let's just have a look at this E-mini chart, because you're going to see some things that I'm going to show you in a moment. The first thing, that big arrow on the bottom left is showing you, is the volume algorithm. And that is showing you red for selling, white for no demand, and green for buying. Now, it looks pretty simple when you look at it, and as I said, thousands of hours went into it. Briefly, let me just tell you what it is. I've taken the last 20 bars and broken them down into 4 groups of 5. And I take the standard deviation between the open and the close, the standard deviation between the open and the high, the open and the low, the close and the high, and the close of the low, and put them into groups of 5. So it goes 20 to 15, and that is weighted. Then it goes 15 to 10, that is weighted. 10 to 5, that is weighted. And the last 5 bars are individual, and they are weighted. So we get this DNA fingerprint out of the market. And as I said, it does about 300 calculations per bar to come up with this algorithm. The next indicator that you can see with that other arrow are those little dots. The yellow shows me that there's high volume, the red shows me ultra high volume, and the cyan shows me ultra low volume. Now, it's no good putting moving average over volumes. That's absolutely rank amateurish. If you do that, it doesn't mean anything. But this volume radar, the algorithm just shows you exactly where these high and ultra high volumes come in, and you can see that the 2 yellow dots on those bars are in fact lower than if you go back to your left hand side. Between those 2 cyan dots there's higher volume, but that was back in the past. Right now it's telling me for the profile that we're in, there's high volume going through, and I'm always alerted to that, and I'm always alerted to low volume, which are those cyan bars, because they are the prelude to a market change. But we come into that in our trading, and it's not for this evening. It's too complicated to go through. And now you can see right at the top, there's another arrow that's come in on red volume, and you can see right at the top there's a yellow dot. And that yellow dot, and you can see yellow dots throughout the whole chart, are Hawkeye pivots. They're isolated highs, isolated lows. Isolated high is where the middle bar has a higher high and a higher low than the previous and the next bar, and vice versa for an isolated low. And that will always give me 3, 5, 7 bar reversals, because you have to know market structure, which I said earlier, and there's only 6 ways a market can move, which is trend, trend up, trend down, trend pause, congestion entrance, congestion exit, and trend reversal. You have to know that, and you have to know your volumes going through those sequences, and that's what we teach you in class and what we teach you online every week in our education rooms, which if you purchase an indicator from Hawkeye, are free to members, and the Wednesday room is totally free to anybody to come in and see Hawkeye in action, but I'll come on to that later. The arrow that's just come in is showing you exactly where these yellow dots, these pivots are, and you can see also now we are showing a magenta bar, which is a Hawkeye wide bar, which is twice average true range over 20 bars, and when we see that, we are alerted that something extra special is happening, and we stand aside, because it normally means that there's a lot of chop coming along, and that's certainly the case is what just happened on the S&P in the last 2 weeks. So let me give you some live chart examples now. And what I'm going to do is just move this across, please. Just bear with me whilst I struggle with my technology. And Randy, can you see my charts now?
Yes, I can see.
Thank you very much. So I'm just showing you, for example, what's happened today on the market on the S&P. And this is a 10-minute, 20-minute, and 40-minute. Now, the indicator package that I'm going to be talking to you and heavily discounting very soon to you comprises of these indicators: the volume indicators down here, the volume radar here, the wide bar here, and the Hawkeye pivots. And let me just take you through exactly what they're doing here. Now, this is the end of the market, so that's chop. But you can see that right at the top up here, sorry, I beg your pardon, I also missed one out. This is the Hawkeye volume. It also comes as a paint bar, which you can put on your chart as well. So this is exactly the same as what this is down here. But you can see that we've got to the top here, and that's giving you your selling coming back down. Let me just put on the most popular of all indicators, the MACD. So you can see in this instance, the volume came in here before the MACD. Although the MACD was coming down, it didn't cross. It was lagged. It came in here. You can see that the volume on Hawkeye volume gave it to you 3 bars beforehand here. And conversely, as it's coming back out of this congestion zone here, you can see that the volume came in here with high volume. Can you see the dot that came through there? Ultra high volume, and that is what pushed it all the way up through here. Now, I said that volume triple time frame is really important, so let's just go and have a look. So you can see on this bar here, on the 10-minute, if we go out to the 40-minute, what have we got? We got red volume. So the 40-minute is telling me right there where the 40-minute confirms. It also comes in over here, and you can say, well, the MACD is declining there. And if I come over to my 20-minute, you can see that I've got white volume, no demand volume there as well. So what it is telling me is that I have a low risk entry here. Let me just take that off, sorry. I have a low risk entry, and that's the point that I was trying to make in that little PowerPoint to you, is that we are only trading risk. We are not trading the market. I don't care whether this was anything. It could be bonds, gold, soybeans, whatever. So I've got selling volume coming in on my slowest time frame. My middle time frame is showing me no demand, and my fast time frame is showing me selling. But most importantly, I've got a yellow dot behind me telling me that there's a pivot high there. So I'm expecting the market to be pushed down. I got a pivot high here on my 20-minute pushing me down, and over here I've got something which we call a phantom high, because although it is an isolated high, the low of the bar was actually lower than the previous, but the high was still sticking up, and that gave it to me. So I'm in a low risk entry position here. So that is that example, and that repeats itself time and time and time again. So let me just go from the E-mini time to Forex, and we can look at Forex, and let me put up the most popular one, which is the Euro USD. Let's have a look at that. And again, let's look at these wide bars here, which is the push down. And these are very dangerous, these wide bars. This came in at 140. Remember, I'm showing English time, so that is 8:40 in the morning your time, before the S&P opens at 9:30. But look what's happened right at the top of the market. You've got red selling volume coming in here, right at the top with a pivot. The news comes out on the US economy, no demand as you would expect, 2 bars before. So for 30 minutes before, 10 minutes before, no demand, 10 minutes before that, 20 minutes, no demand. Then there was selling volume coming in, boom, down it came. Now the market makers come in, they can see that they've shaken the tree, they've got the monkeys out, down it comes. There is your DNA of the market come in. There's your buying volume, 1, 2, 3, up it goes to a pivot high. 1, 2, 3, 4, 5, 6, 7 down. 1, 2, 3, up. Boom, off it goes. So you can see that on the 10-minute it did it. On the 20-minute, look, there's the volume right at the top, pushing it back down. And on the 40-minute, no demand volume right beforehand, pushing it back down. So by tying that all in with all your other indicators that you might use, and I would hope that you would use Hawkeye indicators after you've got used to understanding the volume and market structure and attended our free education rooms, I can assure you that you'll really understand how to read the market. I don't know how many of you have read Reminiscences of a Stock Trader. Great book. But that was back in the days of the old ticker tape. And of course, those traders, all they did was read volume and price to see what was going on. And that's exactly what the Hawkeye indicators do. So let me show you some stocks intraday. And I've started off with Apple. And again, that is the largest held stock in America. And let me just pull that up. And it doesn't matter where we started, but I don't want to say, well, let's start it on this green buying here. And you can see the buying's and in this instance, the MACD's underway here. So the MACD's underway. Had you bought there, you would have had all that chop to go through. But here, bang, in it comes, and off it goes. And you tie that in with your triple time frames. Because if you bought over here, you would have been in no demand volume on your 120-minute. But here you can see that you have green volume that's come in on your 120-minute. And if we come down here to your 240-minute, you've got green volume. That was the low risk entry point of going up. Let's look at another one. I don't know. Randy, just tell me, out of those, which is one of the big stocks, Netflix for intraday? Facebook,
yeah, Netflix is a pretty big one. Apple, Google.
Okay.
Yeah, those are.
Okay, I don't trade stocks intraday at all.
Bank of America is pretty popular as far as volume.
Okay.
The Qs, those are all good.
What's the Bank of America symbol?
You have it there. It's number 8, BAC.
Okay, thanks. But let's just look at Netflix. You can see, look, we've got red volume right at the top here, coming off. What have we got on the 120-minute? We've got red volume. What have we got on the 240? We've got, after this up run here, we've got 1, 2, 3, 4 bars of no demand volume going through. So what is the risk of going short here? It's low. And that's what you've got to do. And if you look at your MACD is just starting to cross as well. But you've got confirmation here telling you, yes, let's get in. Bank of America, let me have a look at that. And again, before this jump down on the 9th, you can see there's red volume in here, no demand coming over on the 120. Can you see that? And over here on your 240, no demands coming through here. And on your 60-minute, there was a little up bar here, but that was not confirmed over on your 120-minute. Can you see no demand volumes there? So that wouldn't have given you any idea to enter along. So you couldn't have been snaked into that one at all. Commodities and bonds. And let me just show you some interesting stuff here. Here is the US bond 30-year. And just look at this up here. Here we go. Right at the top, selling volume, which we've had over the last week, of course, with everything going on with China and the news. But there's no rally that's come in. Now, if we look at this profile that we have here, you can see that you've got an isolated high here, which is pushing it down. That one there is an isolated phantom low because the low is lower. So you know that you're in your congestion zones. The hardest thing for traders is to understand congestion and trade congestion. And again, we teach that in class and in our free education room. So you've got to understand congestion and really understand it. This is all congestion here, but the bias is still to the downside. The only thing I will say, it's to the downside, but the range of the bars are getting smaller here. Can you see as it's tightening itself up? So within the next, well, tomorrow's Friday, certainly by Wednesday of next week, you will get a break out of this to the upside or downside. The bias is to the downside, but it still needs more energy, which is generated by volume to break that low. Let's go and have a look at crude. Crude's an interesting one. There's the wide bar, the magenta bar, as it came in down the bottom, and that was buying volume that came in there, pushing itself back up. There was more buying volume that came in here, but now look what's happened. The volume is telling me that there's no demand here. So that was pushed up. There were a lot of shorts in this market, and remember, the market always wants to shake the tree to get the monkeys out, and it sure did there, and then it's retraced into no demand volume. However, if you go over and look at the weekly, we've got the weekly buying volume in, and at the end of this week, if we continue tomorrow with an up day, that'll be green volume as well. So there'll be 2 weeks of green volume coming in, and we've got green volume on our monthly. So it looks as though this is a total wave. Remember how markets, when I said structure, I told you 6 ways the market moves, but you also have accumulation, price move, distribution, and accumulation again. So the market's going through its rotation at the moment on crude. It's going through accumulation. Particularly the better example was the bond that I showed you. It's going through accumulation, and you want to now see that break out of that accumulation and go up to where it gets to oversold and distribution takes place. And if we come down here and look at gold, and I don't know if any of you get my newsletter, but I was saying that maybe a possible bottom was in on gold right back here as it broke itself back out. But now look what we're getting here. Again, we're getting this selling volume coming in with an isolated high pushing itself down. Excuse me, I must just take a sip of water. And that's what we're looking at. And finally, I'm just going to show you, before I tell you the offer that I'm going to give you tonight on the volume indicator, I just want to show you a couple more things. I just want to show you Apple. I think Google's actually a better one, which had this breakout here. Don't tell me people in the know don't know what's happening. Look at this huge gap up that came up on better earnings. But look at the buying volume that came in here before. Buying volume, but look at the 2 red bars, low bars of red selling volume, didn't take out the low of that bar, didn't take out the low. So the market was trying to feel whether there was any sellers down here, and there wasn't. But look, bang, 1, 2, 3, 4, 5 days before that huge gap up, the volume comes in and sends it up, and we've got our volume radars here working for us and taking that through. And before I move off the stocks, Randy, has anybody emailed in any stocks that they particularly want me to see?
No, not yet.
Would you, anybody who wants me to look at any specific stock, please email in now. Just type in, and I'll look at them straight away for you. Just tell me if any comes in, Randy.
American Airlines, AAL.
AAL. Okay, well, that's pretty self-explanatory, isn't it? There's the pivot high at the top, coming back down. No demand, pivot high, no demand, selling volume, wide bar, consolidation within the wide bar, and rallying back up. Okay, that looks quite nice, that one. And you can also see that on here, on the weekly, you've got a lovely, and at the end of this week, you're going to get a yellow dot in there, pushing that up. So I think that looks rather nice. The only thing that I would say is that it's in monthly downtrend on the volume. However, at the end of this month, if that low isn't taken out at 34.10, you'll get a yellow dot, providing it closes up above the high. So that one looks interesting. Any other, Randy?
Walmart, WMT.
And again, on the daily, well, here we have the no demand, selling volume coming in. There's the wide bar, followed by no demand, pivot high, pivot low. It's in its accumulation phase in congestion down here. We have to have a break out of there or a break out of the two yellow dots to really tell us what to do. But the secret is over here. Look at the weekly. The weekly is buying volume came in. And again here, if this comes out and doesn't take out the low of that on a monthly, you're going to be on your way on that one to the upside. Next one, Randy.
Alcoa, AA.
I'll just do AA. I'll do one more. And I just want to show you the stock indices. Well, wow. That's aluminium, isn't it? So this has just had a straight downtrend, but look what happened here. Ultra wide bar, no demand, buying volume came in, up it went, and again on our weekly we got buying volume, and on our monthly we have buying volume. That looks a great one. I like that. I'm going to look at that tomorrow. That's a great one. There's also something else that I like to show people. Again, in our seminars we teach this. That profile that I have there, one yellow dot, one higher, one lower, is always like a bird trying to flap its wings to take off. So, you know, I've got that. I like looking at that little profile. When I see that, boom, up it went, and that took itself from an open of 840 to 970. And let's just show you the stock indexes. Here we have, you know, again, the selling volume coming in before the big down moves. You can see that the selling volume is coming in, selling volume on the weekly. We've got a pivot high here pushing this down on the monthly. Again, on the monthly, we're not going to have any movement until that low is taken out. So it looks relatively secure here at the moment, but no demand in here. There was some buying volume test. It wasn't it didn't materialize, and down it came, and now I got no demand there at all. And if we look at the Nasdaq, just see what that one showed.
We're starting to get a lot of people asking how they can get a hold of this volume offer.
Okay, I'll come in. This will be my last one that I do, and again, you know, there's the selling volume coming in. I hope I'm convincing you on this, how important it is. And no demand, and we've got our volume over there. And finally, I just want to end up, before I show it to you, the full Hawkeye suite on tick charts. We specifically like tick charts. Randy will be showing you this when I depart soon, but this will just take you through. This is intraday trading on Apple, and you can just see by using the triple time frame and the full Hawkeye suite, it really, really does show a lot of strength. So now, let me just do this and change my screen. You got live chart examples up, Randy?
Yes.
Thank you. So there's a webinar special, and right down at the bottom, that is the buy link, hawkeyetraders.com/ID, and there is a phone number if you wish to phone and place an order. And what you're going to get is the Hawkeye volume indicator, which, as I said, comprised of the volume, the wide bar, the pivots, and the volume radar. That has a value of $360 if you went onto my website today to buy that. We also give you access to the members area. In the members area, there is tons of education videos, etc. It also allows you to come into other areas of Hawkeye, our Wednesday training rooms, which are free, our Thursday trading rooms, which are run by Randy. Randy is a very, very competent trader, and he really does show you triple time frames working on volume on a Thursday. Access to a Skype room. The Skype room, I think, is very important. There's always a host of Hawkeye users in there, all sharing ideas 24/7. saying, I like this trade, I like that trade, somebody please help me with this, etc., etc. That's very good. I dip in and out of it from time to time. Randy is virtually the moderator on that a lot of the time. We've also given you a bonus of a 2-hour live training session on the Hawkeye volume on Wednesday, August the 30th. And the reason for that is I don't want to sell this to you and then just wave you goodbye and give you a good luck postcard. We're going to give you a 2-hour in-depth webinar where we will really, really explain this to you. So if you get the indicator today, it's not on August the 30th, Randy, it's on September the 30th, isn't it?
That's correct, September 30th.
Yes, the slide says
September 30th.
Yeah, the slide says August 30th. That's my fault, I beg your pardon. On September the 30th at noon Eastern Time, because it's very important that once you join the Hawkeye family, we don't just walk away and wave you goodbye. I really want you to be a success. So the value is £1,000, which we normally charge to the members area, the training rooms, and the Skype room. There's a total value of $1,360, $97, and that's for today. And that $97, I think, represents probably what you spend going out on a Saturday night to a nice restaurant with a bottle of wine. So I don't think it's a huge amount of money, and I think that it's a very fair offer on our behalf, because the one thing I want in trading is my legacy to be the volume, and getting you guys really understanding volume, being able to hold into trades, hold into trends, know when to tighten up your stops, know when to take profits, and that is exactly what volume does. So what I'm going to do now is to hand over to Randy. Randy is going to take this webinar as long as you like. You can ask him any questions. He can show you multi-charts, and he will also tell you the platforms that it's all available on. So Randy, over to you.
Thank you very much, Nigel. I'll make sure that we see that at this point. And I'll make this so that you can also see the offer link as well, so that there's no problem with that. There we go. There we go. All right, so if there are any questions that we want to handle, anything that you want me to show and demonstrate for you, I'll be more than glad to do that, and I'll pull up any example charts if you'd like to see it running on NinjaTrader, MetaTrader 4, multi-charts, eSignal, TradeStation. I've got them all set up and ready to go if you have any questions with regards to that. If there are any questions that you had during Nigel's presentation on volume that you need answered, just let me know and I'll be able to do that too. No, it is not only for TradeStation. It is available for NinjaTrader, MetaTrader 4, multi-charts, eSignal, and TradeStation. We are working currently with Thinkorswim to try to make a platform available there. However, NinjaTrader and multi-charts are good alternatives to Thinkorswim, and they do integrate with the Thinkorswim platform, the data from the Thinkorswim platform. Like I mentioned earlier, if you don't have one of the platforms, then NinjaTrader offers a wonderful solution where you can download and install their platform free of charge, and you can install your Hawkeye tools for analysis directly on your NinjaTrader platform. And you can use that free as long as you don't actually trade through the platform. However, if you want to exercise trades, then you will have to purchase a NinjaTrader license. No, you do not have to buy a separate license for each platform. You can buy one license for any MetaTrader 4 platform or any TradeStation platform, so you can have it set up on your laptop or on your desktop, or if you have a home computer and a work computer, then you do not have to do that. But if you have multiple workspaces like NinjaTrader and TradeStation and multi-charts, then you will have to have separate licenses. Yes, yeah, you'll have to have a separate license for those, but you can, if you wanted to, use your second license to have it set up on that. You do get 2 licenses with your purchase, so if you want to set up one on TradeStation and one on MetaTrader 4, then we can set that up for you. But if you wanted to set 2 MetaTrader 4 accounts, like a demo account and a live account, then you would have to give up your TradeStation license to run both of those. Or you can just change them back and forth. But it's easy, and you can do that in the members area online. Absolutely. You're welcome. The link is right here. Okay. What is the volume radar again? Okay, the volume radar are the small dots that you see here on the volume. Here I see one specific, but they identify ultra high, very high, or ultra low volume events. Okay, so you can see here this is an extremely low volume, and this is a high volume, but we don't see anything ultra high based upon the height of the average volume that's coming in here. So the volume radar points out significant events in volume that we want you to make aware of. We point these out and show you exactly how to use them every single week, what we had described in the training room here. Okay, the Thursday training room is 3 hours of live training every single week. So you get 3 hours of training. The Wednesday training room is 1 hour where we go over the basics. Okay, the bonus training is a 2-hour intensive training where we focus specifically on volume and how you can use your volume indicator without any other indicators, because we can show you all the indicators, but we wanted to make sure that you understood exactly how to use that. Are there other questions? Anything else you'd like for me to show? There were a couple of other people had Priceline was one of them, PCLN. Priceline, if you're looking at volume specifically, then this is looking at the daily, weekly, monthly overall trend of Priceline. You can see where volume had bottomed out. You have an exhaustion bottom with a pivot low and a cluster of pivot dots showing that the bottom has formed, and then you're looking for price to break the overall trend direction. So if you're looking at the trend break, volume is showing that it is supporting that on a breakout on a move high. The extreme reach high that Priceline did here was a huge volume, but there was no buying volume at all. So you can see that that is a very, very weak bar followed by a very strong no demand doji. Price has to go down with regards to that. Okay. AA, yeah, Nigel had showed that already. You've got a huge amount of selling pressure, constant trend of volume. Then you've got some bottoming appearing, but then you've got a nice doji pattern, wide bar identifying no more buyers in this market. I mean sellers. No more sellers are coming into this market. So you've got a nice signature bottoming pattern and then a nice display of buyers stepping back into this, showing not only weekly but monthly buying volume stepping back into that. So that yet another good one. Okay. Intraday, absolutely. If you're looking at the volume on intraday, instead of looking at the longer term, you can see it in 3 minute. Here's a 3-minute chart of what crude oil did today. But if you were following Alcoa, then you can go back and see what Alcoa did through the day. The morning opened up incredible, nice gap up. Then you can see automatically from yesterday's run up, the gap up, volume supporting an attempted push down to gap fill. Then you've got a nice run up. So volume is sitting here telling you the direction that price wants to take. Topping pattern shows you've got consolidation, but when price breaks back with a trend of volume, then you automatically know the price is going to continue in that way. Topping pattern, then we see consolidation and then price breakdown. That tells you that the flavor and intent of the direction has changed, and then price then goes down at that point. Okay, so we teach all of these volume skills in our training classes. And when you integrate volume with your current methodology, if you're putting your MACDs on, or if you're using those to help you to see intent of trend direction, if volume is supporting your move, then you're going to make that trade with a lot more confidence. Okay. When you see these crossover points and you're trying to make a trade decision, then if volume supports that move, you're going to make those trades with a lot more confidence. Just throw those up as examples. We don't use the MACD. We don't use the moving averages at all. So DWTI chart. Okay. This is the intraday DWTI, the 3x inverse crude. Okay. This is an intraday trend. Okay, showing the 3-minute, 6-minute, and 12-minute time frame. We could set that up to be any time frames that you like, but you can see opening of the day with big gap down prior to close, volume selling into this, no demand, and then initial selling breaks down, points the direction of the day. Pivot low with a nice rally, gives us a no demand with low volume. So you got a long range bar with a very low range volume. That's very bullish, okay? So you've got that extent pushing you into buyers stepping into this market, pushing the market back into that. All right, so you can see that same extent here. So if you go back to the longer term, then we can put that back in here, DWTI. Then you can see on the longer term, the daily build and the run up on that 3X due to all the weakness, okay, of crude oil. And then now you've got the weakness coming in because the recent strength that we have seen. This is a 3x leveraged, but if you pull up crude oil itself, then you can see just the opposite. All the weakness that was there, then all of a sudden you see huge volume buyers stepping back in, breaking the downtrend, but we need to see the weekly and we need to see the monthly start to roll and to give us specific direction. And that's exactly what our other indicators do. We make other indicators that help us to be able to see trend and to identify that. So if you see what volume is telling you, you see ahead of time that as price tries to push into new highs, when sellers step into that market, it's telling you, nope, there's no way we're going to be pushing that price higher. And what does that set up? It sets up to, as you see price trying to push up, you see declining volume. As you see price starting to move down, you see increasing volume. And then you see the real move break out, huge amount of selling volume pushing into this market. Buyers trying to come in, huge volume, narrow range bar, very bearish. And then the intent of the market continues to go. So we teach all of these skills and techniques because volume really is the key. And understanding of volume with price really will get you the edge in these markets. I will use the same chart right here. If I apply this to CL, you can see the same chart where we're using the trend indicator. We're using our momentum indicators coupled with volume. As we see the rise of volume coming into this, then we can see on the break of our stop region, we can see the trend is initiated. We have a trailing stop that holds us into the trade. So we're not trying to show you how to get the peaks of the market. We're not trying to show you how to get the bottoms of the market. We do identify how to take and profit from the meat of any specific trend. Okay? So that's the whole idea behind it. But volume is the key. And understanding what volume is telling you is the foundation for everything that we do at Hawkeye. I hope that helped. Are the instructions for setting up the indicators on your platforms. The instructions are included in a PDF that you have instantly when you purchase, so you get access to our members area. So let me make that quick for you real quickly. If you go to the Hawkeye Traders website, okay, hawkeyetraders.com, you'll get a link into the membership area when you purchase. And then within the membership area, once you log into the site, then you'll have access to resources, product videos, the actual products that you've purchased, the ability to sign up for all of our trading rooms, and access directly to your account. All right, so underneath the products, if you purchased your volume module, then you'll be able to see directly from this location all of the previous training recordings on demand, a little background about what volume is telling you, and the ability to enable the software for whatever platform that you're using. In addition to that, we give you quick installation guide, quick instructions on how to go through and properly install that on your machine, and we give you a indicator guide directly for you to follow along. So everything is available here. But if that's not good enough, then we have a resources area that allows you to look at all of the resources that we make available to all of our premium members. The Hawkeye 3-step entry and exit method, the 6 ways the market moves teaching, all of the mentoring teachings that we have done over the past year, all 20 of those are 2-hour videos. Then all of our Thursday training sessions have been archived if you need to go back over and catch up on some of the teachings that we've done over the past year and a half, then they're all there, in addition to all the weekly videos that are put up on here. So you get access to all of that premium content by becoming a member.